What's up guys, welcome back to the channel. This is still me Solomon Wisdom aka Born to Trade, and today we'll be talking about liquidity and inducement. So if you're totally new to this channel, please consider subscribing to the channel. Here in this channel I teach about smart money concepts and how you can become a better trader trading with smart money concepts. So if you're interested in content like this, hit the subscribe button and hit the notification bell to always get notified each time I upload contents like this. Let's get into the topic of today: liquidity and inducement. Liquidity and inducement is a concept you need to understand as a smart money trader. If you fail to understand the concept of liquidity and inducement, you will find yourself losing a lot of money in the financial markets, because you will always fall for those traps, because liquidity and inducement are traps that are built by smart money to trap traders. So let's get into this example. This is Euro USD. This is the price action I noticed on the price charts during the release of FOMC statement, that is the Federal Open Market Committee statement that was released this week. So I'm using it to explain liquidity and inducement. So let me explain this quickly with this. Firstly, I hope you understand what liquidity is all about. Liquidity are places on the price charts where large pool of money is resting. So liquidity can be equal lows, equal highs, swing lows, swing highs. We have internal range liquidity, we have external or sell side or buy side liquidity. So all those things can be liquidity areas. Now, what is inducement? Inducement and liquidity is very similar. They look for something to call it to make it a little bit different, but for me, liquidity and inducement are partially the same. So looking at what I just drew here on the price charts, what we can clearly see is that price mitigates a zone. We have a rapid expansion to the downside, and price returns to mitigate a zone right there. After the mitigation, we see price push lower. Here is the mitigation. After the mitigation, price pushed lower. It couldn't break structure. We got a pullback before a break of structure. We have an unmitigated zone, because surely there will be a zone resting over here, and there will equally be another zone resting right here. And when we see things like this as smart money traders, some people get confused and they don't really know the zone to trade from. So explaining the concept of inducement. Inducement are places on the price chart where smart money trick people to take a buy or a sell. They trick you to take a buy or a sell just to induce you into taking a trade and building more liquidity, and after that you see them taking you out of your trade. So for me, this is what I call inducement. They trick you into taking a buy or a sell from areas like this. So for me, here is an inducement area, because price try to mitigate the zone, but it couldn't. Instead, what do we see? We see a rapid expansion that breaks structure to the downside. So what will you see price doing in cases like this? As they have induced some smart money traders into taking trades from this zone, what you see is they come to that zone, mitigate that zone. You see them giving you a little reaction, and you get excited that price is pushing to your direction. More liquidity has been generated at this area. Now you see them coming back to mitigate this zone before pushing to the downside. So for me, this is what I understand by inducement. Now, what we can clearly see from here is that price expands lower, pull back, and here we got a break of structure to the downside. And before the break of structure, what you can clearly see is that we have a zone right here, and price have some minor structure over here. We have a minor structure with forms and equal highs over here, which we call liquidity. When we find equal highs at areas like this, we know it's liquidity. Equal highs are areas, retail traders, they see equal highs as a resistance level and they see equal lows as a support level. So when we saw these equal highs, we know that this is a resistance level, and we might see price coming back to mitigate this zone, that is coming to clear the money resting above this high. When they see here as equal highs, they see it as a resistance level, and you see them entering a sell orders at this level and expect price to push lower to the downside. And after that, what do we see price do? We see price pulling back to mitigate a zone over here. Yes, the truth is that we understand that liquidity is resting at this area, and now you see price coming to mitigate zone and break structure to the downside. A lot of people will get confused and they will ask questions like, why didn't price clear this liquidity at once and move to the downside? If price leaves a liquidity area, it might stay there for months or for a few weeks before you see price coming to clear out that liquidity. We don't know what price is going to do. We don't know when price is coming to clear out the liquidity, but one thing we need to avoid is trading from that area. You see that trading from this area. So someone that is trading from here, the person is lucky. Don't try to do it next time, because you see liquidity is resting at this area, and one thing for sure is that in the future price will actually come back to clear out that liquidity. Okay, price will actually come back to clear the liquidity. And when price mitigates the zone over there, price mitigates something from here and pushed lower and breaks another structure. So when price broke structure, we have a supply zone over here, and this is what I call inducement. This is inducement because this area looks like a very good sell zone. We have a break to the downside, possibly price break structure to the downside. You might have some kind of imbalance resting over here, and a lot of people will say, okay, this is a high probability setup, and they'll be looking to trade from this zone. This is inducement. This area is looking like a very good sell area. Everybody will have their eye on this area, forgetting that we have liquidity resting above this high and we have an unmitigated zone at this level. This now looks like a very good sell zone, and equally we have a trend line liquidity. Retail traders, they'll be looking to sell from this area. We equally have equal lows over here. So this is inducement, and this looks like a very good sell zone. You see price coming to this level, take out those trying to buy from this trend line. Smart money traders that are trying to buy from this zone, price takes them out. The liquidity resting above this high for a very long time. You see price clearing all those, tap into the zone, push lower and clear out the liquidity. And this is exactly how inducement and liquidity works. Now let's move to the price chart. Let me show you exactly what happened on Euro USD after the statement was released. So this is Euro USD price chart. Like I said, I'll use it to explain the price action that occurred during the FOMC news release. Okay, so from here, what can we see? You can clearly see that price gave us a change of character, and you understand that change of character explains that the trend is about to change. And I was actually induced into taking a trade from here. I tried to trade from here because I was expecting price to come react from here and push to the higher time frame points of interest. There is a demand zone at the higher time frame. I was expecting price to tap there before price starts to reverse, but unfortunately price took me out of the trade after I got my entry over here, and price starts to push the downside. And here is the change of character, which explains that price has changed direction. So what we can clearly understand is that we have a break of structure to the downside over here, a break of structure over here, we have another break of structure to the downside. And as a smart money trader, you understand that this explains that we are in a downtrend. And over here, what do we see? We see equal highs over here, which tells us that liquidity is resting above there. And you can agree with me that we have a hidden zone over here. We have a hidden zone which will be expecting price to come back from here. Maybe after this move, we expect price to pull back, mitigate the zone and continue lower. But what do we see price do? What price did is that it came, mitigates this zone over here, it taps and mitigates this zone over here. And anyone that is trying to trade from here, that person is totally wrong. Even though the person got lucky that price pushed lower and break structure to the downside, anyone that is trying to trade from that zone over there is getting it wrong. Because one thing you need to understand is that liquidity is resting over here. Price should come, clear out this liquidity, taps into this supply zone, and we look to trade lower. Okay, I hope you can see what is happening over there. Any trader who got lucky trading from this zone, disregarding this liquidity that is resting over here, the person will still be interested in trading from this zone right here. You know, we have another supply zone over here, and he will be looking to trade from that zone. And this is what I call inducement, because smart money has succeeded in convincing the person that this is a very good sell zone. The person succeeded in trading from here, hits the targets. Maybe the person will be trying to trade from this zone again. And another thing you need to see from here is that price is building a trend line liquidity. Price builds liquidity over here, and over here we still have a liquidity resting over here, because here looks like a support zone and you can see this trend line liquidity. So any smart money trader who doesn't understand what's going on the price chart right now, who disregards this liquidity resting above these highs, person will be looking to trade from this zone over here, this supply zone over here. Now what do we see during the release of the news, talking about the FOMC news? When it was released, what do we see? Price pushed higher, clearing this trend line liquidity. Retail traders that are looking to trade from this zone, they were taken out of the trade because they saw this first touch, second touch. They might be expecting a third touch that will push price to the downside. Okay, you see, price took them out of the trade. Smart money traders that are looking to sell from this zone, they were taken out of the trade. This liquidity that has been resting above this high for a very long time, price took them out, tap into this zone, and what do we see? We see price pushing to the downside. I hope you see that, and this is exactly how liquidity inducements work. When you understand the concept of liquidity and inducement, you will always see yourself at the better side of the market. You will find yourself trading better. One thing we don't know is how long price will take in order to come and clear out liquidity. But once you understand that liquidity is resting above those areas, and at some point price will come back to clear out the liquidity, you will see yourself building a better and a good trading ideas. Liquidity rests below or above highs and lows. So with this example right here, I hope you understand the concept of liquidity. So move to your price chart right now. Try to identify areas where liquidity is resting in the market. Like I just said, we don't know how long price will take to come back to take out liquidity. Like what just happened right here, price left this liquidity and it took price a long time. Sometimes it might take months, few weeks before coming back to clear out the liquidity. But one thing you need to understand is that price will always come back to clear out liquidity. Okay, so you can go back to your price chart like I just said. Try to practice this, and if you are new to the channel, please consider subscribing to the channel. This is the end of the video, and thanks very much for being part of this video.